The market was subdued on Tuesday, gradually recovering from the prolonged weekend. After its recent poor performance in the final weeks of 2023, the US dollar, USD, demonstrated a technical recovery, causing gold USD to close the day in negative territory. The Relative Strength Index, RSI, shows a buying pressure as the current level is at the 60 level after the non-farm payroll release. In the near-term price action, the 2060.00 level could be a crucial static level with a confluence resistance from the daily pivot. In that case, investors might expect a strong bullish trend continuation opportunity after violating this line. Moreover, the dynamic 20-day EMA is the immediate support, with an upward slope, which could be the immediate support to look at. On the bearish side, the 2040 level would be a strong support. A bearish daily candle below this level could lower the price towards the 2020.00 to 2015.00 area, before visiting the 2000.00 psychological level.